Hello everyone, welcome to our morning briefing. I'm Andrea. So it's 1st of August, the day after FOMC, the very well anticipated FOMC, the rate decision. So we have seen yesterday FOMC actually proceed to a rate cut a quarter point. So this was very well anticipated. It was already priced in the markets. It was fully actually anticipated. But what wasn't anticipated was the fact that we're gonna see Chairman Powell, in general the Fed board, to provide a less dovish stance, actually a quite hawkish policy path, by saying that this is a mid-circle action and it's not the beginning of a lengthy cutting circle. So it's like they're saying, no, you know what, it was just once for now. In September we won't proceed with another rate cut. So this would actually added pressure in both bond and stock markets, while on the other hand, of course, it actually boosted dollar higher. So strong dollar since yesterday, a very strong dollar. We can see that clearly in this euro dollar chart, and this is due to the not dovish stance from Fed. This is what actually caused also. Let me show you stock markets. This is an S&P 500. This is what caused this sell-off in stock markets during the US session, NA's session. But it also we have seen indices also trading lower due to FOMC and due to the strong dollar. So our focus today turns, of course, to Bank of England announcement, which is expected to hold actually rates steady, and also on the manufacturing PMIs readings from Eurozone, UK, and UK as well. So other than that, I would like to highlight over here that as for the near future, there are three reasons why we believe that dollar will continue being dominated. And this is, of course, the fact that Fed actually cut its interest rate yesterday for the first time in a decade. It also signaled that it is unlikely to reduce rate anytime soon. So this might reflect to 2019, and the dollar has been advancing ahead of the release, and the move may further extend. And this is what actually happened and continues to happen even into London Open. You can see this. This is the last hour candle between 9 and 10 server time. Continues moving lower after a small sideways movement. So the fact that the dollar has been advancing ahead of the release, and also we've seen the Fed signaling that it is unlikely to reduce further rate cuts in the near-term future, is what actually will continue to dominate dollar, and that's why we might see dollar strength continuing for some time. So sorry about that. So let me just go through the charts. So we have seen euro dollar spiking to 110.36, breaking the 111 round area. The next real support for euro dollar, I have to go back to the weekly chart, unfortunately, to find a support. Just a few pips lower, 110.17, or at the latest weekly fractals, 109.0. So that's the next support for euro dollar. On the other hand, on the flip side, we can see that actually the same behavior can be seen in every single dollar cross. So dollar yen spiking higher up to 109.30. Again, that happened on the anticipation of FOMC, and of course on the lack of any progress from the trade talks. So we have seen dollar yen spiking higher 109.30. So let me zoom out. So still resistance holds around 109.70 or 110 200 moving average, 200-day moving average. So that is about dollar yen. Pound dollar. So this is a very interesting cross. From the one hand we have dollar spiking higher, but from the other hand we have a sterling that has been in a long-term decline due to the Brexit, due to the elections, and etc. So spiking down to 120.97. A bit of sideways movement ahead of London Open, but still a very weak pound, especially since Boris Johnson, actually the Prime Minister, is actually pushing for a no deal for Brexit. So the risk for no deal is still on. And it's getting stronger and stronger, while there is also the risk of a sharp election that could actually backfire given the strength of support for the Brexit party. So Boris may instead look to find a face-saving means of exiting the EU in a political sense on October 31st, while remaining in the single market and customs union for a timetable multi-years period to negotiate new agreements with the EU. Okay, which is something Brussels may be happy to concede to, if of course takes the no deal risk off the table. So again, sterling, weaker sterling. Next support for sterling is down to, is down to actually 2016, because we already broke the 2016 support around 121 area, so it was retested last night, and the next real support is just 30 pips lower the immediate support, and the very next one stands down to, have to go back to the monthly chart, I'm afraid, and cannot really find the support. Is like an empty space on open doors towards 116 area. So immediate support around 1970 and 1950, or even lower 116. That was for pound. Safe havens actually suffered on the FOMC. Where's my gold? Gold actually spiked lower, drifted lower for 2 days in a row. Currently 1406 area. Next support for gold is down to, let me zoom a bit, okay, is down to mid of July and around 1400s, or even lower 1394 area. So that was it for now. Thank you for watching. The focus should be now on BOE and the manufacturing PMI out of Eurozone and UK. So take care. Strong dollar remains and still on bid, so we are waiting to see whether we will see the same volatility as yesterday happening on Thursday, 1st of August as well. Thank you for watching. Hope you're having a great trading day, and see you later on. Bye bye.